The seasonal pattern I had been watching had expected the weakness to continue into the early part.
Top 5 dividend stocks that will pay your monthly $1,000 bills. Hello everyone. In this video, I'm going to go over my top 6 stocks for June 2021. I've spent the last month studying hundreds of stocks, and this is my selection of the greatest buys right now. Make sure you watch the video all the way through to receive my whole analysis on each of these businesses. I'll go through some significant figures from recent news and why I think they'll continue to rise. But hey, before going on with our video, hit that subscribe button to watch more videos like this one. Now let's get going. Number 1, Bank of America, BAC.
Bank of America's stock saw a huge drop during 2020 and has recently started to...
The first stock on my list is Bank of America, ticker BAC, an American financial services and banking corporation. Chances are you've banked with them at some time in your life, and they're the major personal bank account I've had for many years. So one share of Bank of America is now trading at $42.39, with a 52-week low of $22.39 and a 52-week high of $1.26. Looking at the one-year price chart, we can see that Bank of America was trading at $25 a share a year ago, and that their price really began to rise in November of 2020. It's a massive corporation with a market capitalization of $363.253 billion and a PE ratio of 18.19, profits per share of $2.33, and a 1.7% dividend. They have a price-to-book ratio of 1.45 and a 5-year projected price-to-earnings growth ratio of 1.55. With a profit margin of 27.12 and a return equity of 8.14, Bank of America is in good shape. Returning to the balance sheet of Bank of America, we can see that they have total cash of $803.34 billion and total obligations of $542.46 billion. It's always fascinating to hear what analysts have to say, so on a scale of 1 to 5, how would you rate this? Analysts now rate Bank of America as a 2.3, indicating that it is somewhere between a buy and a hold. The average analyst price objective is 42.95, which is somewhat over the current price. 42.39 is the current price, and compared to its counterparts such as Citigroup and JP Morgan Chase, Bank of America has fared admirably in the past year. I've been a long-term believer and investor in Bank of America, and the gains have certainly paid off. While I don't feel the stock is inexpensive, I do believe it is priced quite properly. Bank of America currently has a 12.6 national deposit share, beating out JP Morgan and Wells Fargo, and they've set their sights on 25 as a long-term goal. The thing about a behemoth like Bank of America is that they can use their size to their advantage. For the first quarter of fiscal year 2021, Bank of America reported total revenues of $22.8 billion. Number 2, L Brand stock ticker.
It's going to split into Bath & Body Works and Victoria's Secret.
The next item on my list is L Brand, stock ticker LB, which is an American apparel retailer that owns brands such as Victoria's Secret Pink and Bath & Body Works. L Brands is now trading at $69.87 with a 52-week low of $13.18 and a 52-week high of $71.99. Their one-year price chart shows steady growth from under $20 a year ago to nearly $70 today. Their market cap is $19.487 billion with a price-to-earnings ratio of 13.97 and a very small dividend of 0.21%. They have a 5-year PEG ratio of 1.03 and a price-to-sales ratio of 1.5. L Brands has a profit margin of 10.73 and a total cash of $3.9 billion on the balance sheet. Analysts are split on this one and have given it a 2.5 rating, which means it's somewhere between a buy and a hold. However, the average price target is $77.10, which is about 10 higher than the current price of $69.87. So the L Brands Q1 fiscal year 2021 profits actually above analyst expectations, with earnings per share of 1.25 and revenues of $3.02 billion. Net income also increased to $276.6 million, and total sales increased by 80% from $1.65 billion a year before. This was fueled by momentum across its 3 main brands, with more and more people paying full price for more and more items. Later this year, L Brands will spin off Victoria's Secret into its own publicly traded company with the goal of maximizing management focus and hopefully delivering more profits. Number 3, Intel stock ticker. The next stock on my list is Intel, ticker INTC. Intel is an American technology company that is the world's largest semiconductor chip manufacturer by revenue. Chances are you're using an Intel processor right now on your computer. Intel is currently trading at 57.12, with a 52-week low of 43.61 and a 52-week high of 68.49. Intel stock has been extremely volatile in recent years, as evidenced by the fact that 1 year ago they started at over 60 per share, dropped significantly at the end of the last year, recovered until April, and then saw a significant correction. Intel has a market cap of $230.651 billion, a PE ratio of 12.82, and earnings per share of 4.46. They do, however, pay a 2.43% dividend. Their 5-year PEG ratio is 2.51, and their price-to-book ratio is 2.89. In terms of profitability, they have a profit margin of 23.93 and a very strong return equity of 23.82. They have around $22.4 billion in cash on hand and a current ratio of 1.89, which is extremely good. They have given it a 2.8 rating, indicating that it's a hold, but the average analyst price target is 64.87, which is significantly higher than the current price of 57.12. Number 4, Schwab US Large Cap Growth ETF, stock ticker SCHG.
You remember Intel? It's currently around $60 a share. I was a buyer sub 45. I bought a couple.
The Schwab US Large Cap Growth ETF stock ticker SCHG is the next stock on my list. This isn't a company, but it is an ETF that tracks the stocks of the Dow Jones US Large Cap Growth Total Stock Market Index. I talked about this in my recent Top ETFs for 2021 video, but I also want to include it in this list. It contains 235 stocks from businesses with higher than average growth prospects such as Apple, Microsoft, Amazon, and Facebook. Right now, one share of SCHG is trading at 137.42 with a 52-week low of 95.85 and a 52-week high of 142. This exchange-traded fund has performed exceptionally well over the last year, rising from just under $100 per share to where it is now. The fund has net assets of $14.59 billion, an average yield of 0.46%, a year-to-date daily total return of 6.7%, and a very low expense ratio of 0.46%. That implies that for every $10,000 invested in this stock, you'll only have to pay $4 in yearly fees, which is exceptionally low for an exchange-traded fund. Looking at these sector ratings, we can see that SCHG is very strong in consumer cyclical financial services. The average PE ratio for healthcare communication services and technology is 36.26, while the average price-to-book ratio is 9.47. Number 5, Alphabet stock ticker, GOOGL.
All right, Google?
Yeah, let's do
Should we
Google.
go to the Goog?
I love Google.
So do I.
Number 5 on my list is Alphabet stock ticker GOOGL, which is an American corporation also known as Google and is the parent company for the world's most popular search engine. Alphabet also includes subsidiaries such as Waymo, Google Fiber, Fitbit, and others. So one share of Alphabet is currently trading at 2.356 with a 52-week low of 1.351 and a 52-week high of 2.431. With a don't be put off by the high price because you could buy partial shares on platforms like Robinhood. With a market capitalization of $1.597 trillion, Alphabet has a PE ratio of 31.41 and earnings per share of 75.04 cents. They have a price-to-book ratio of 6.87 and a 5-year PEG ratio of 1.44. They're also performing exceptionally well in terms of profitability, with a profit margin of 26.12 and a return equity of 23.69. Looking at their balance sheet, we can see that they have a total cash of about $135.1 billion and a very strong current ratio of 3.1. Analysts love the Alphabet, so they're writing it as a 1.7, which means it's somewhere between a buy and a strong buy, and the average analyst price target is $2,739.05, which is about 15% higher than the current price of $2,356.85. Here's a bonus one, Crypto Bulls. I'd only recommend buying this stock if you're a true believer in crypto in the long run.
all the different sectors, which is kind of now on crypto. Crypto's getting the punching bag.
I predict significant price swings for Coinbase, which will mirror the volatility of crypto in the long run. If crypto becomes even more mainstream, I see Coinbase as a great long-term investment. Coinbase's recent IPO on April 14th saw prices rise from $250 to the low 400s before closing its first day at $328 per share. Now that Coinbase is trading in the low 200s hours, I see it as a great long-term investment. Obviously, prices have dropped significantly. I'm going to begin dollar cost averaging this company since I believe its price is approaching a new purchase mark. And JP Morgan just given Coinbase a $371 price target, causing prices to drop over 10%. With overall revenue of $1.8 billion and earnings per share of $3.05, its first quarter results were somewhat below expectations. What do you think of these crazy stocks? Also, what do you think of today's video? Don't forget to let us know in the comments below, and don't forget to like this video and subscribe to our channel for more interesting content. Also, hit the bell icon button so that you'll get a notification whenever we post a new video.